I'm Ryan. I'm a sophomore in the Orphe department. I'm in TCM, which is one of the investment groups on campus. So have been dabbling a little bit in the stock market for the last 2 years. So I think the stock market is more or less like a way for different investors to invest in the companies that they think will do well over time, and for companies to sort of raise money by selling to the shares to those sort of investors. And I think it's like kind of abstract, but really I would think of it just as like a global market, mostly done digitally, that sort of transacts these sorts of like shares in different companies. Yeah, so I think a stock exchange is sort of like one way for stocks to get traded. There's a lot of them in North America. You have the American ones, the New York Stock Exchange, the NASDAQ, et cetera. In Canada, you might have the Toronto Stock Exchange. But really, I would say like the important difference is probably just that when people say the stock market, they mean like the sort of sum aggregate total of all of those different exchanges. So like I don't think anyone is like, oh, the New York Stock Exchange is a stock market, sort of just all of it together. Yeah, I think the stock market really provides like utility to everyone involved. So you have companies, it's pretty difficult to run a company, you want to raise capital. And so the stock market's one way for them to do that. They can sort of sell those shares to equity investors, and then the result is, they get money, they're happy. And on the flip side, investors are pretty happy, right? They get to support the companies that really, create impact on the world. And they also sort of, there's lots of benefits financially. A lot of Americans, invest in the stock market for retirement, through pension plans, et cetera. So I think in some way, you're really just trying to create a medium of exchange between different investors and companies. And that's why the stock market exists. Yeah, I would think of like the stock market and individual stocks sort of just, they function in terms of supply and demand, right? When people think that a stock is going to go up, they'll buy it. And in turn, the stock price actually does go up. And the opposite is true. When people think stock might go down, they might sell it or, even bet against it by shorting it. And, as a result, the stock price will go down. And I think that can happen for, millions of different reasons. And you really need to, think about the individual stock. But largely, it could be anything. If a company, might do well over the next year. So, for example, when the coronavirus pandemic hit, Zoom, suddenly everyone was using it. And so the stock went up. And I think, largely it's around sentiment around each stock that causes it to move. Yeah, pretty much anyone can. I think there's an age requirement that's like you have to be 18 technically, but more or less anyone with, like $10 even can open a brokerage account and invest. Obviously, there are more sophisticated investors as well. You have hedge funds at play who are investing in the stock market, but really the barrier to sort of entry here is pretty low. I think anyone can really participate. It's a very democratized form of the stock market. I do somewhat infrequently, but I do invest personally, yeah. So I think really in the stock market, what you're looking for is not just what will do well. So I mentioned earlier, Zoom did well, obviously because of the pandemic, but you need to be earlier than everyone else in terms of the sort of trends. What you want to look for is sort of what's like a company that will do well that other people don't yet know will do well, or maybe other people know will do well, but you think that the company is so much better than everyone else, right? And so that's really what you're looking for when you're looking for an investment idea for a company. And I would just recommend, if you know a lot about something, invest in that something. If you know everything in the world there is about semiconductors, then look at semiconductors. And I think, that is sort of the best way to approach it, but just look for things that other people are kind of missing. So this is always a fun one. I think more or less when you bet against a stock, you borrow someone else's share to bet against it. So you don't actually have ownership of those shares. And so what a bunch of retail investors, a lot of them on Reddit or, TikTok, et cetera, realized that a lot of people were borrowing shares to bet against GameStop, and there just weren't that many shares available. And so if everyone kind of just bought those shares up and drove up the stock price, you really could do damage to those who were betting against GameStop. And people cared because, they ended up like hedge funds, which I think are generally perceived to be, very greedy, very, pushing to sort of maximize their financial returns. They were the losers and retail investors were the winners. And I think that's a narrative a lot of people can get behind. Yeah, I think there are definitely a lot of problems to investing in the stock market. I think the biggest one is really, it is just quite difficult. And I think also with the advent of apps like Robinhood, it's very easy to get sucked into more complex financial derivatives and end up losing a lot of money. I think that's something that, make sure you're doing your homework and learning before you start to invest. And I think, other disadvantages, obviously, the big one, I think that's the elephant in the room, is people talk a lot about how the stock market kind of compounds wealth inequality. Like the stock market grows around 8% per year over the last few decades. And, when you're wealthier, you have more money in the stock market, and that compounds and grows at a faster rate than the US economy. And I think to some extent, you could make an argument that, the stock market might increase wealth inequality. That's maybe one thing otherwise that people talk a lot about. Yeah, I mean, I think Robinhood's great. It's like a platform that, really makes it simple. It's got amazing UI, really pretty design. So I think what I would say is, like, if you're just starting out, Robinhood's probably the more fun app. But I do think that in the long term, if you're looking for a pretty serious account for retirement, something like that, I'd recommend going more with TD Ameritrade. I think they're a little more strict with financial requirements as well. So you won't accidentally end up trading options or something and then end up losing a lot of money. I think Robinhood is deceptively simple. It makes the game look a little too easy. But I do think that, both are great options. Just, be smart about what you're doing and you'll be fine with either. I think largely what the best way to get involved is pick up a book. There are lots of really great books. One that I really like is You Can Be a Stock Market Genius. It's a great book. I think try to understand, exactly what's going on in the stock market before you really start. I think people often oversimplify it and then get burned as a result. So do your homework first. But as far as it goes, just pick companies that you think will do well, that you think other people don't really understand well. And I think that that's the best way for you to, especially if you stay in your circle of competence, stay in where you know a lot about, I think generally Princeton students are very intelligent and have the ability to, really get there. But I think, just try to learn as much as possible first and then make smart financial decisions. And even in the worst case, the stock market tends to go up. And so if you just hold over long periods of time, I think it's a really smart financial decision if you're thinking about retirement, something like that. So definitely would recommend start with a book, start with some reading, and I think everything will go pretty fluidly from there. Yeah, I definitely think it's a smart financial decision. The thing that I mentioned earlier, that's on one end, you have the argument that's look, it causes wealth inequality. But the other end is that the stock market over long periods of time tends to go up by pretty significant amounts. And, of course, you can lose money in the short term. You can, do all kinds of shenanigans that are dangerous. But it is a decision that it helps you save. And I think just in terms of what people tend to think about your life cycle, when you're younger, you can take on more risk and you should buy more stocks, which are slightly riskier than, other financial instruments like bonds. So I definitely think it's a good financial decision. It's always good to start early, start saving. And I think that the stock market is a great way to do so. Yes, you definitely can. The regulations are going to depend on, the country you're residing in or the country you're originally from. Your tax rates will probably come from those as well. But it's generally pretty simple. Just like American investors can invest in international markets, you can also go on any of these brokerages like Fidelity or one that you want to use. And if you're not an American citizen, I believe some brokerages might support you better than others. They don't actually know which ones, but I think you can certainly find that information on Google. And regardless, the answer is definitely yes. The process to get there, I think, will require a little bit of Googling. I think reading a lot is the best way to do it. The one great thing about investing is there's just a wealth of knowledge. This is a game that's been played for hundreds of years now, and it's one that's well written on. And I would say if you're really trying to be serious about the stock market, pick up some books. The one I mentioned earlier, You Can Be a Stock Market Genius, is great. Another one that we love to have people read in TCM is The Acquirer's Multiple, which is a great book. I think it's by Tobias Carlyle. And read books. I think that's a great way to get started. The second thing is just be patient with it. I think when most people start investing, it seems a lot harder at first. And I think largely as you sort of get to know the stock market, your different investments, the companies you love, I think you'll find it's very interesting, and it's something that I think people enjoy. But the main thing is to stay focused in the long term. I think the last thing, just view it as a way to sort of empower you to make good financial decisions. I don't think that you should really view it as like, oh, I need to 2x my money in a month. It's just realistically not going to happen. And the only way you can make it happen is by basically treating it like a casino, which is also how you could lose all your money. So be patient with it. This is something that you need a long time horizon to sort of invest in, but I think in the long term, it's a great financial decision.